Will Trump's speech actually ease the markets even further with regards to the Iran conflict, or is he going to ignite more uncertainty? And I think we're going to get traditional Trump. He's going to be forceful. He's going to be matter of fact. I think he's going to get off the rails a little bit. So I think he's going to talk a lot about the economy. I think he'll talk a lot about oil. I think he's going to talk about NATO as well. I think that's a big pressing issue right now, given that a lot of these countries that are in NATO with us did not align with us on this conflict. Now, I also wouldn't be surprised that whenever he says, regardless, and puts the market at ease, that, hey, should Iran not come to the table like requested, open up the street and basically appease to all of those demands, I'm still in the camp that we may possibly see troops on the ground. So I'd be really cautious about what I'm listening to. And I think I would just take the cliff notes of what he has to say, let traders digest that. Again, it is a short week. You're looking at the speech tonight. They got tomorrow for trading, and then the market is closed for Good Friday. Now, on the data side, why did rates go up a little bit? Well, all the data was actually pretty positive. You had ADP come out and forecast 61,000 jobs. That was better than expected. But the biggest thing that we saw was ISM prices came in higher. And again, another inflationary number showing inflation moving upward. Now, I will say all of that data is from February when we were pretty much humming along. We were looking at a great spring and summer season for the housing market, and all of that got derailed. So I expect those March numbers to come out very different, which means now you're going to have to wait for April data, May data to really make a determination on where interest rates are headed with all of that data. So who am I? Real quick, my name is Kevin Weeberg, aka the Mortgage Mouth. Every day I bring you an episode of the Daily Dose. What happened in the marketplace? How it affected interest rates? What do we got the rest of the week? And should we float or lock? Thank you for tuning in. Make sure you hit that subscription button so you never miss a beat. So on the float or lock front, I'm still in the camp of float. I think we have better days ahead of us. And I think now is more weighing in favor that this conflict is going to be behind us. So I think after the holiday, and should nothing change on that geopolitical front, I think we're going to be looking at lower interest rates next week. However, a big thing will be the non-farm payroll unemployment rate on Friday, even when the markets close. So, hey, Monday, Tuesday could be a doozy. Be strategic if you need to lock, use yield spread premium, or use seller concessions to pay for those closing costs. And I'll be coming to you again tomorrow, y'all. Once again, appreciate you tuning in.